Hello everyone! Welcome back to the rationalinvestor.com's daily brief video. This is our public broadcast. No idea if this is broadcasting or not, but what the hell. Try and have some fun. I see there's a grand total of 0 people on here, so I've probably not done this correctly. As you can tell, obviously, Chris is away today. Chris is our sort of show director, producer, chief bottle washer. So usually you guys get like set up with all of this sort of lead-ins and all that kind of stuff, and you know, all of this sort of lead-ins and all that kind of. It is live, so that's good. But nobody's watching. So anyway, hey, look at that. There's 3 people watching now. Woohoo! So we'll throw this over here. Usually we do like Zoom calls and all that kind of stuff, but I'm not very good at any of that kind of stuff. So we did the old school, the Google Hangouts. And I think I'm screen sharing my dashboard screen here. So anyway, wish us luck. No idea whether I'm going to give you any value here today, but I sure hope so. Okay, once upon a time, Facebook announces a dividend. Mind you, you're not supposed to call them Facebook anymore, eh? It's funny how a lot of these technology companies are changing their name. Not allowed to call Twitter, Twitter. Not allowed to call Facebook, Facebook. Jesus. Suppose at some point we're probably not allowed to call Microsoft Microsoft anymore. We used to call Microsoft Mr. Softy back in the day. Anyway, interesting market state. I'll tell you that much, by crackers. Econs. I think actually Econs not very market friendly. You know, the data out today obviously was the jobs report for I guess this would be for January, and huge numbers, like knock the cover off the ball kind of numbers, like literally twice expectations, and then they had to revise the previous numbers, month's numbers, and of course average hourly earnings coming in twice expectations. And interesting to see if we actually pull this data up. I thought this Fed and all these Fed people were supposed to be trying to get in front of this inflation problem. That doesn't look like it's, mind you, that's not a good image to show you. I guess we can't really show you anything other than that, eh? Silly interneting. I swear, I think this is all rigged. But anyway, Josh says waiting to be let into the room. Oh yeah, there you are. There are a few people. Admit all. Admit. There you go. Well, good thing that you chimed in there, Josh. Welcome to the frivolity here. Thank you for saying something there, because I would not have seen you guys. Yeah, well, Josh, you're just totally awesome, aren't you? PMA for the win. And I tell you, you know, I couldn't do any of this stuff without Josh and Julian and Stuart and Chris. And I mean, you can see trying to do this with Chris here, gone, and this is half a train wreck, isn't it? January barometer. Jesus, if we listen to the January barometer, we're going to the frickin' moon here. Strap on your seatbelts, folks. 2024 is going to be an absolutely insane year. But, I mean, so back to what I was saying there just a moment ago. This is not going the direction that if you were a central bankster and you actually wanted to control inflation, yeah, this is not going the right direction. This is going the exact opposite direction. So, you know, there's a major problem here in our society, and that is that I suppose it's the hallmark of the 21st century. I mean, I don't know how bad this gets. I mean, it's they always say you can tell whenever I used to interview people how stressed people are. If they're like, they touch the bottom of their face, not so stressed. That's an interesting conversation. And, oh God, I don't know. Things are getting tough. And then, oh my God, this is. And then, oh Jesus, this is a nightmare. I mean, the problem here. And you saw when I started talking about this, I think I went for the eyes. So that's how bad this situation is. You can always tell by how high somebody touches on their head how stressed they are. I mean, the problem here is, and I put out an interesting tweet to this effect yesterday. I always like listening to this guy. This guy, I don't know
All right,
if he's
we
the
have more.
best sort of market timer or not, but I think he's got a pretty good beat on sort of like kind of like I don't know, like if you were working at like a prop firm kind of idea, I think this guy would probably give you a pretty good sort of gauge of what the tone on Wall Street is. And these he put out a video yesterday going, oh my God, I mean these central banksters, they're playing us, they're lying to us right to our faces. And they're manipulating the market because they know specific things are happening at specific times, and they're keep in mind they're bankers, so they are basically finessing the banking industry to serve their banking masters. I would actually make the argument people like Janet Yellen, Joey, well, no, not Chip Hop! Right? Jerry. Mind you, we noticed on that FOMC meeting there a few days ago, not too many, oh, Chip Hall, I want to have your baby. Almost none of that, from the media. Media does not respect him at all anymore. But, we're being played. And I tweeted this out because I thought this was a really good sort of summary of how badly we are being played here. And if the central planners, if the bankster crooks, if they were really doing this for the betterment of our society, and they really don't want inflation to be out of control and all that, then really there should have been no big rally here like in the bond market over the past I don't know, Jesus, 3 or 4 months, I guess. If we zoom out, even the weekly chart for that matter, this whole rally that we saw coming out of this October event here, this was all completely market manipulation, complete and utter market manipulation. This is not reality. This is, and like I said, this gentleman the other day, and probably should give a shout out to his actual channel and his name. He's a pretty smart gentleman, and he's got a lot of followers. I mean, much smarter, much more politically correct than a guy like me. But this RJ Talks, I think he actually summed it up really well. And the sad thing is that Jerry has said this recently, and now in this interview, he included a piece from Granny there that don't expect prices to go back down. They've done the Great Reset, and I suppose that's this argument. They've basically established our new economic reality. Now their new economy is in the $20 trillion neighborhood down in the States. And this little blip you saw here was the Fedsters coming in and basically manipulating the market. And the reason why, because there's a whole bunch of firms on Wall Street that are going to refinance just a staggering amount of debt. And you tell me, what would the banking industry think? Joey Diamond, think all the Goldman Sachs guys, would be nice if there was a target name that we could use for Goldman Sachs. Goldman sucks. What would what would serve their interest? To do more loans? To roll over all the debt that Wall Street, of course, and our entire society is absolutely, up to our eyeballs, if not even higher. What would be in the best interest for the banks, right? And remember, these central banks, they work for the Rothschilds. They don't work for you and I. Don't kid yourself, folks. So what would be in their best interests? Obviously, to do more loans, to roll the loans over, to make sure that there are big fat fees associated with the bonds and the loans, and just business as usual. And it turns out that as we were cranking down here, and the bond market, of course, was absolutely puking out here last year, because this is our reality, folks. All of a sudden, they mysteriously came in and just started, they backed off on the quantitative tightening, and I don't even know if they did, but there was some really good anecdotal evidence that I was showing you guys from a Canadian who was showing how quantitative, the Bank of Canada itself is actually quantitative easing now when you look at their data. Interesting how Jerry didn't really make too much reference to quantitative tightening or easing, other than the other day he said, we're going to continue doing what we do. And I still think, on balance, that they're just going to continue unwinding their balance sheet, because they don't want to have a balance sheet of a whole bunch of government bonds. They only did that because if they didn't, the Chinese were going to just dump all the American bad debt and drive the U.S. into bankruptcy. And, that's the sad part about all this, is that, when you sort of peel back the onion and you actually see reality, none of this is actually in the best interest of the public. But anyway, so, it's an interesting point that like I said, that the gentleman, RJ Talks or whatever, I thought he did a very good job, probably way better than I would ever do, to sort of explain how brutally corrupt, whoops, now my screens are all blowing up here, how brutally corrupt all of this is. And really all the entire sort of stock market rally that you saw here and the bond market rally was just purely a function of the banksters wanted to make sure that all of these people that were up to their eyeballs in debt and that were going to have all these bonds come due. And hats off to this gentleman, because he even did point out back in the fall that there was a shitload of U.S. debt, corporate debt, personal debt, probably even government debt that was going to come due here in the new year, and all hell could break loose. Well, it turns out that they actually manipulated the market to make sure that that all that bad debt would just get rolled over at an acceptable interest rate. The problem with that, of course, and this is the whole problem, of course, with the whole inflation issue, is that what do you think that did? This artificial propping up of the U.S. bond market here and adding a whole bunch of liquidity. What do you think that did to the inflation issue? Well, I can absolutely tell you, and we've been talking about this and sort of scratching our heads for a while now. Just kind of going, why is the market rallying the way that it is? It shouldn't be doing this. If, of course, the Fed was serious about getting in front of inflation, but it turns out they're not. And of course, we have this absolutely insane GDP growth. People are sitting there, in third quarter, we had like 5% GDP growth. Fourth quarter, 3.5. I mean, just absolutely insane GDP growth that doesn't make any sense if you're trying to get in front of this inflation problem. And now you can see it in the actual jobs data. The economy is booming here, but the economy doesn't need any more stimulus. It doesn't need to be propped up. The only reason why it was, a la the bonds, the long end of the bond market, the only reason was because of all this debt that was coming due. So The issue now is if they've actually gone and refinanced all that paper, then, and this is where that RJ guy was kind of freaking out, is he's going, if you listen to Powell in his conversation there following the Fed, he's done a complete 180. Now he's not talking about interest rate cuts anymore, and he's not talking about the propensity of the economy rolling over. He's talking about having wanted to raise interest rates further. And frankly speaking, with this kind of economic data, don't be shocked. And I've said this repeatedly, there's no way the Fed's going to cut rates in the face of this kind of economic data. And then, of course, if you have the stock market booming to new highs, well, how the hell is the Fed going to cut rates in the face of that? The whole point of interest rate increases is to try and slow things down. And if in the face of all these interest rate increases, they can't slow the market down, well, guess what? There's going to be more interest rate increases down the road. I did find it fascinating to see the actual gold market didn't respond well to that data this morning. And I get the impression, and this is an interesting situation going on in the world right now. And I don't think a lot of you actually who follow me and who are relatively new to the market, I don't think you've ever seen this market state before. This reminds me of the good old days of the dot-com boom and actually previous greed cycles. And what do I mean by that? Interesting, you can see the short end of the curve here, this 2-year note, which follows Fed policy. You can see that bull market is running out of steam here, and if anything, it's getting ready to roll back over again. But we've got a situation here with the US dollar that you might actually find that the US dollar itself actually goes through a prolonged period of economic, of rally, of appreciation, not because people are buying the US dollar to sort of run into US treasuries because everything else looks crap, and they just want to bury their head in their sand. They're going to be buying the US dollar, selling euros, selling, fucking China to joke currency. And, it's interesting. I did see somebody made a comment about my parallels with Mexico in the 1970s and then what Mexico had to go through in the 1980s. I actually think that there is a huge parallel between that story and what's happening in China right now. So, the sad thing is you see Mexico still trying to sort of get its act together. And of course, half of the Mexico, the northern part, the desert there, it's run by gangs and outlaws. I wouldn't be surprised if Canada actually has to go down that road. And, we see people like Casey and Meg get their shotguns and they set up bunkers there in Alberta. It wouldn't surprise me one bit. But anyway, that's, China aside. Yeah, that's another conversation. Don't trigger me. Hey, I tried to go see a doctor today. Fucking good luck. That was a total disaster. So it just goes to show, the big sales pitch of Canada. Come to Canada for socialized medicine. You don't have to worry. That's a joke. Let's, if anything, we should probably start seeing the memes start to develop about how the socialized medicine system here in Canada is absolutely collapsing. So if my one piece of advice for you is if you're Canadian, for God's sakes, don't get sick. Don't get old. Don't require medical attention, which, of course, is kind of unavoidable. This stupid human existence, because I don't know how bad gets for this place. But anyway, I asked somebody else not to trigger me about China here today, so I'm going to leave that topic completely alone. I just wanted to mention this because we are now into the greed cycle, and you should actually expect to see the US dollar outperform. And why? Because people are buying US stock. And you can't buy U.S. stock without U.S. currency. Well, what do you mean by that, Brian? Look at this damn market. Now Meta is actually announced that they are going to pay a dividend. So you have to buy U.S. dollars to buy the US stock, right? This stock isn't listed in euros, it's listed in US dollars. That's the NASDAQ. And I mean, you can see Amazon just going absolutely crazy. Nvidia, right? Druckenmiller for the win. Um, I didn't get in on these individual names, although, God, I really missed the boat on this fucking trade, especially Facebook. When it was below like $100 there, that was a no-brainer. I should have just gone in and buy. I did buy the Communication Select Services ETF for my retirement account. When I saw this weekly W come in, that was just a no-brainer. I had to buy that. So anyway, this is the way that I'm participating in this market. And, I can't complain, but it is in my retirement accounts, 50, 60% moves. So that's not bad. Helps all the other pieces of crap that I bought. And that's often what happens. And this is why you diversify, right? Don't take too big a bet in anything. And it all balances out in the end, kind of idea. But anyway, point of the matter here is this is definitely the sweet spot of the market. But I think the important lesson for everybody here is, I think a lot of you, you've grown up in the world where the US dollar, we all hate the US. I mean, how many of you were trading stocks back last century? Probably not many of you. Back last century, of course, into the cycle peak, I mean, the U.S. remember blowjobs, Lewinsky, and all that bullshit. U.S. dollar was reigning supreme, and it was just all full bore. So anyway, point of the matter here is, and a little higher highs and higher lows. It looks to me like this thing's breaking out and heading higher. Got a fun little paper trade sim trade as an example of trading this bot. And you can see the bot target is basically just going to be a tag of the top of the megaphone up here. So I think in the short term, and I wouldn't be surprised if these, horizontal support and resistance levels become magnets for the market. And you can kind of see, we tag the top of the megaphone, we tag the bot objective, maybe mess around here a little bit. And then you can kind of see how this is going to be like a big honking head and shoulders. And I wouldn't be surprised if this kind of move here is predicated on something like maybe the crude oil market, ratcheting back up and everybody calms down a little bit. Maybe also too, once all that sort of refinancing is done of U.S. debt, maybe the bond market rolls back over. I'll tell you what, the bond market did not like what it saw here today with these econs. And, you listen to that RJ guy, I get the impression that a lot of market participants are actually very angry at how they literally have been played here over the past 3 or 4 months. The bonds, they really have no business being up top here. And you can see if this M does come in here, I think that means that, we have to start worrying about the market coming off here in earnest. And it being driven by higher interest rates versus anything else. So, if anything, if you want sort of market direction, I would watch this one chart. Do we actually go and M out here? If we do, then, let's assume that this is the high. You never know what the hell's going to happen here going forward. But if we go, so boom to boom, chaos theory, our initial objective should be, and that's probably, a nice reload zone revisit down below. So something like that. Boop, boop, boop. Oh, let's flip that around. And what you should see is these probably line up. So, this is going to be what there's good old Brian's favorite fib. So this is probably the most important market to me right now. And like I said, it's interesting that the stock market is catching an incredible bid based on the Meta and Facebook data coming out and them actually paying a dividend now. But the interesting thing is if you look at the broader market, and you look at look at the real estate market. Is the real estate market maybe projecting higher interest rates going forward? Uh-oh, SpaghettiOs. Utilities, look at them getting just absolutely smoked here. Are they suggesting maybe interest rates have got to go up? Uh-oh, SpaghettiOs. And interesting, too, to see that Allen Alan's stock has just been cratering recently. Really, really good sales pitch there to learn about things like outside downside key reversals. That was a wicked weekly sell signal there last summer out of this guy. But if you actually extricated Nvidia, Meta, Amazon, interesting how Chevron's trying to catch a bit of a bid in here. But if you just took these guys out of the equation, I think the stock market would actually be down a huge chunk today. So, in a weird sort of way, this sort of tech, sort of funny. You know what this is? I hate to say it, but in the 1940s and then really into the 1950s, there were just a few select stocks that actually drove the stock market higher. And they used to call them the Nifty 50. And they were things like Procter & Gamble with Tide laundry detergent, which is, of course, something brand new. And consumer-based goods as the baby boomer generation came online and all that. I hate to say it, but I think that, with the scamdemic, they basically put all of the sort of 20th century business model out of business. And, you can see the inverted head and shoulders here on Amazon. This thing looks like it wants to go a lot higher. I don't know whether you can actually do like a head and shoulder. I don't think you can on something like that. I might even think maybe like Foggenbaums off of previous lows and then, sort of projections off of that for targets. But I get the feeling that, the names that you see on their screen here, they are going to be sort of this generation's Nifty 50. And who knows how high these damn things go. It might be just absolutely staggering, the actual limits. And there probably are other names, but, the names du jour, what is driving the NASDAQ up right now, it seems to be these guys. And like I said just a second ago, the irony of it all is that the broader market is not really very happy today. And even, I do find it interesting that even Alan there is not doing very well. So this is a bit of a mystery market here a little bit. Because as I said, I don't think the market liked what they heard. This is something that really, and actually we should be winding up this free video. Man, I could go on and on and on. So many interesting cross currents here. Look at that, up 300 points now on the NASDAQ. And yet the Dow, actually interesting, the Dow was down earlier today. You can see it's just barely crossing the flat line here. And the S&Ps, as a sort of measure of the broader market, they're up like 1%. So anyway, if you're long those three particular names, you're feeling pretty damn good. And I suppose if you're long things like we said, the communication services, which I think it looks like this is coming up into probably a technical objective. What I'd be really concerned about here, though, is sort of like once this euphoria of these names kind of wears off here in the short term, like I said, the communication services kind of coming into technical objectives. I'm a little bit leery about what happens on the other side of this. And how that bond market acts going forward. Because I think, like I said just a moment ago, I think that the bond market got really played badly there by the central crooksters. And I don't think that they're very happy right now, one bit. So we'll see what happens. Finishing off this free broadcast, we do actually have a special guest on the show today, which... I think it's going to be a really fun treat. We've got Steven, our harmonican guru, sort of our quarterback of the harmonics room at TRI. And also he's a big Solana fan. So, talking fun Solana names. He even got me involved in the Solana network right now, sort of dragging me tooth and nail. But anyway, I'm now into Solana thanks to Steven. So we'll have a really fun conversation about crypto and where it's headed here in the after party here today. So sort of finishing off a free broadcast. Is there anything I can add to the crypto conversation today? in a weird sort of way, I don't know whether Bitcoin's really, it got bid up through the ETF event, probably a little bit too far, too fast. But not really. I think if anything, Bitcoin's kind of almost like with the rest of the stock market, kind of just going, well, the data actually, if you see W's in things like employment data, um, this is a holy shit. The Fed's got to crank interest rates higher. I mean, it's too bad that, and I suppose this was purposely done so we can't analyze this in detail. But you can see we are Wing out here. This is a bad, bad sign for inflation because, if this data looks like this now, when this ultimately peters out and this loses its momentum, where the fuck is this going to be? So the Fed's now fallen behind the curve. So if that's the case, then, I'm sure the broader market is kind of like, I don't know whether I really want to make any big bets here. And of course, I showed you the US dollar index there. It's booming higher. In times past, that would be a risk off bet. And I do think that there's probably a lot of people that still do look at that as a risk off bet. So it doesn't surprise me that Bitcoin's not really painting a huge reaction here. The only issue is that this is going to be inertia. What I do notice, and this is my comment recently about Bitcoin, is I think that, of course, we had the ETF and the ETF hangover, and a lot of kids, of course, got really ripped apart. And when I say kids, I mean adults too, that really don't know what they're doing in the market. Got ripped apart there and FOMO bought into the ETF event. And I think this is the hangover. So it looks to me like the market is trying to sort of stabilize here. This is a typical inverted head and shoulders pattern. And interestingly enough, if you measure this pattern out, and we do actually resolve bullishly, and based on what I see out of the NASDAQ, I wouldn't be surprised if this gets dragged higher. Keep in mind, crypto is a huge sort of, tech move. And if tech and NASDAQ's moving higher, this thing should be dragged higher. Probably more interesting in this environment right now is how does this total market cap act? So, we did rally into trade location. We did start to paint a bunch of divergence that was sort of like, uh-oh. That did play out to a certain degree, but I think that they basically established a trading range here now. And keep in mind, these markets, they never, tops and bottoms are never like sort of, crystal clear. They sometimes, are fits and starts. I mean, is this the similar sort of head and shoulders pattern developing now on the total market cap? And I don't know whether I draw my shoulder like that, maybe off of that low there. But is that the same sort of thing that we're seeing on Bitcoin? Could that translate into a nice big fat rally that goes and takes out these highs? Sure. I mean, hell, this is the market. It'll do any old damn thing it wants. And I also noticed, too, there are some interesting darling names that have reversed violently and started to head higher. So this Link, for example, it's caught an incredible bid here. I think we're probably running into some short-term resistance, kind of like what I showed you on the XLC and all that kind of stuff. So, I mean, there's no way in hell you could buy that there. I mean, I think probably this, this is an interesting commentary on the bot setup. We were conjecturing a month or so ago about whether this would trend continuation, and the first sort of trend continuation pattern failed. But it looks like boom, 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 one low, two lows, three lows. Nice little inverted, nice sort of inverted empire. But you can see there's the bot entry level, and woohoo, off she goes. And I am seeing pockets of strength in the crypto market. So, just to finish off this free video for you guys here, I'd keep your eyes peeled for setups. You can see crypto market is starting to catch a bit of a bid here. Names like Sjord's favorite names, some of them. I would imagine that the REND, if NVIDIA's doing what it's doing, then RNDR probably is going to be catching a bit of a bid here. Yeah, you can see their W's working. So does this guy go and take off here? I noticed that Sjord's Hello had a big update today. Nothing really to get excited about there, but could they push this thing up to new highs here? Sure, wouldn't surprise me. So, and also too seasonally, like this is the middle of February. This isn't really the time of year to look for like, what's the word? Um, Seasonal tops. This is probably more the type of environment where if you get pullbacks and they're into juicy trade locations and they set up long setups, that's probably what you want to concentrate on. So keep hunting those setups. I don't know whether there's anything I would be doing on a name like this, but it's just an interesting illustration that names are catching a bit of a bid here. And if anything, like I said, we should have a lot of fun in our after party here with Steven. He is like a Solana guru and guru. I don't know whether we can use that word or not, but I will. And I've actually been posting in the site lounge. There's a number of names I've been following here closely. I noticed things like this guacamole starting to look bullishly here. So we won't go into too much detail in this free broadcast. I just want to leave off. If anything, it's a nice teaser. Come on over to therationalinvestor.com. You can watch the after party. It's nice. I think excellent value added, especially when we have our special guests on Friday. You can sign up for a free trial here. I mean, it isn't going to cost you anything. But would it be worth your while to come and, if you do play crypto, come and see what some of our interesting little poop coins are doing on the Solana network and whether there are things like W starting to form? Hint, hint, hint. That's a W. Pay attention. And I also noticed that airdrops are really popular these days. So we'll talk a little bit about how names have been popping off here. Interesting on this one, and I suppose this is a function of DeFi. I did buy this here. I did have my sell off on a double order working, and I didn't get any fills. If this is a futures contract and we traded that far beyond my fill, I could go to the exchange and demand fills. But in DeFi, sorry, Pally. Nice try. So anyway, we should have a great conversation about what's setting up here for the weekend. And, you see these chart patterns. They're popping here. So I definitely think there's money to be made in this space. So come on over, hang out with Steven. Steven, you ready to rock this thing with us here today?
Yeah, ready to rock.
All right. Steven's ready to go. So we'll leave the free broadcast at that. Hope you guys had some fun watching me rant here, and hopefully I've put into context a little bit about what you're seeing in the market. And as a fun sort of side to back up all my rants about the crooksters, I think this guy's video here that he just did, and I just tweeted it out, so by all means, follow me if you want more from Brian on what the hell these idiots are doing to us. Never a dull moment in the market. So have yourselves a great day. PMA for the win. Slow and steady wins the race. Remember what your number one job is. Don't take no wooden nickels. As Marat would say, hugs and kisses. Have yourselves a great day. All the best. And I guess I'll see you on Sunday for broiler chickens. But for now, it's a bye for now. Oh, crazy Brian. What?